Hi guys, this is Mr. Ibrahim, the trader of Gova Trading Academy. So whenever you want to do the analysis on professional course, the first thing you need to do is to mark out the equilibrium lines. So let's say you want to do analysis on the weekly equilibrium line. The first thing you need to do is to mark out the monthly equilibrium line first, which is on the D1 time frame period separator. So, and it is a green, it is going to be a blue line. I'm marking it out here at the opening of this bearish candle. So my EQ is at the opening of the candle. Then I'm going to lock my line. The next thing I'm going to do is go to the H3 time frame. Now on the H3 time frame, you can see after marking my equilibrium line on the D1, when I zoom out the candle, I zoom it back in again, then I switch back to a lower time frame. Now on the H3 time frame is where we usually mark the weekly equilibrium line. Okay, remember, monthly equilibrium line, you mark it on the D1. Weekly equilibrium line, you mark it on the H3. So on the H3 time frame, right now, what is going to happen next week is what I'm trying to analyze. What is going to happen in the market next week? It has not yet happened, okay? It has not happened yet. So I'm trying to analyze what is going to happen next week. So now, what is going to happen next week here? Analyze it. I can clearly see that the monthly equilibrium line, the blue line, is above, and I can see that this is Thursday. Equilibrium line is current market price is below. You can see where the current market price is, right? You see the current. This is current market price. Market price is far below. The blue line is far above. There's big gap between these two equilibrium lines, which means automatically this is going to be, I'm looking at a sell alignment. I'm looking at a sell alignment right now, okay? I'm looking at a sell alignment. So the moment you are able to determine what alignment you have in the market on that particular pair, the next thing you need to do is to switch back to the D1 time frame. Switch back to the D1. Now, when you switch back to the D1 time frame, zoom out the candle a little bit. Don't zoom it out too much, just a little bit. Not like this, but just a little bit like this is okay, okay? Now, when I switch to the D1, what I'm looking for is a bearish candle. Why am I looking for a bearish candle? Remember, the alignment I saw is a sell alignment. So I cannot be looking at a bullish candle in a sell alignment. It doesn't make sense. So it means that in a sell alignment, you need to be looking for a bearish candlestick in a sell alignment. So the only bearish candlestick I can see within this area, and the bearish candlestick I'm looking for is a candlestick that looks like a rectangle in shape. You can see this is rectangle. We can also say this is rectangle, isn't it? But this is not the type of rectangle we are looking for. We are looking at a candlestick. So candlestick usually form in a way like this. Candlestick does not form like this. So rectangle is not going to be in a rectangle like this. It is going to be in a way like this. So the rectangle we are looking for is something like this, right? A candle that looks like rectangle. You can see this candle here looks like square. This looks like square. This one here looks like a rectangle or square, both at the same time. You see this it looks like a rectangle a little bit, and somehow like a square too. So if you see this type of situation, it is confusing. I don't like taking trades that is confusing me. You understand? I like taking trades that the information on that trade is very, very clear. It's very clear because I'm trying to put my money there. I'm trying to risk my money. And I don't want to be risking my money in a situation whereby the situation is like 50-50. You can see, guys, the candlestick here looks like rectangle and square at the same time. So, but some of you are still forcing yourself to take it. I don't see any reason why you should be forcing a trade. It is not by force. It is not a must that you must trade every day in the markets. Even if you happen to analyze 40 pairs, even if you happen to analyze 40 pairs, and all of the 40 pairs you analyze are not giving you the opportunity you are looking for according to the order enhancer, what do you need to do? It means you analyze on Thursday. For example, I'm just using Thursday as a rough example. If you analyze on Thursday, Thursday is not giving you what you are looking for. Look for the opportunity the next day. You can always look for opportunity on another day. If there's no opportunity here today, there's going to be opportunity tomorrow. If there is no opportunity tomorrow, there is another day. Okay, there's always going to be an opportunity that is going to come. But what if you force yourself to take a trade on Thursday and the picture on that trade is not beautiful enough? You see, you lose your money. After losing your money, the next day a beautiful setup came in, and then you don't have money and you don't have enough money to trade that beautiful setup. Who is doing who here? You see, you are doing yourself, right? And at the end of the day, you say Forex is scam. Okay. All right. Anyways, now the monthly is above. We all know when I switch to the H3 time frame, we are looking at a sell alignment. So I switch back to the D1 time frame. After switching back to the D1 time frame, I'm looking at a bearish candle. So on this bearish candle, guys, there's something we call supply and demand on the candlestick supply and demand. So let's say this is a bearish candle, guys. Look at it. Let's say this is a bearish candle. Mr. Akintayo, can you see this candle?
Yes, sir.
Now on this candle, let's say the candlestick has wicks. Let's say the candlestick has wicks. Wicks. Now on the candle, the opening of a bearish candle, we all know it is here. The closing of the candle is here. So that's the body of the candle. That's the body of the candle. Now, we all know that the supply of the candle should be around here. Look at anywhere around here is the supply of the candle. Okay, it's going to be the supply of the candle. So it means that if you have a candle like this, and the candlestick is having wicks like this, the wicks is bearish. And the candlestick is having wicks like this, it means that your sell zone, that's your yellow zone, that the yellow zone we usually mark on a lower time frame. Whenever you switch to the D1 time frame, your yellow zone must be sitting on the supply of the candle, on anywhere on the supply side of the candle, anywhere around here. It is supply, okay? This area is supply. But any moment, at any point in time whereby you mark your yellow zone and then you mark your yellow zone on the lower time frame, and then you switch to the D1 time frame to see where your zone is sitting on, and you happen to see that your zone is sitting on the body of the candle, you see, your candle is no longer sitting on the supply. Your zone rather is no longer sitting on the supply of the candle, okay, which is not good. It is not good. What if the candle does not have body? What if the candlestick does not have wicks? Rather, if the candlestick does not have wicks, where then can you mark your zone? Your zone can be sitting on the area here. You can see it is still at the opening of the candle, isn't it? It is still in the supply area of the candle. Hello, guys, right? Can you see that?
Yes.
So, yes, but at any point in time whereby it is sitting on the body, it is not good. But most of the time, if I'm taking a sell trade, listen, guys, this is an advice. Most of the time, if I'm taking a sell trade, I like to see a bearish candle like this. I like to see a bearish candle like this. If the candlestick does not have wicks, then I like to see it like that. And then I mark my zone. My yellow zone should be sitting in the supply side of the candle. But if I see wicks like this on the candle, I see wicks at the bottom of the candle, not the top of the candle, I don't like taking that type of candle. Do you understand? I don't like taking that type of candlestick. Now, the type of candlestick I like taking is a candle that has wicks at the top a little bit, or the candlestick that has wicks in both sides. Do you understand? In both sides. Just like you can see here, you see this candlestick is having the wicks in both sides, so it is good. Now let's move on. In a bullish candle, we all know that this is a bullish candle. This is a bullish candle. This is the wicks of the candle. So it means if you have a buy trade, when you switch to the D1 time frame, your zone has to be sitting on the demand of the candle, anywhere around here, which is good, which is demand. But at any point in time whereby your zone is sitting on the body of the candle, it is not good. It is not good. Vice versa, I like to see my bullish candlestick having wicks at the bottom. If the candlestick does not have wicks at the bottom, I like to see the candle not having wicks on both sides. If the candlestick is not having wicks on both sides, then I mark my zone, my demand zone here. What if the candlestick is having small wicks at the top? Just small wicks at the top. I also like seeing this type of situation also. It is good, okay? But if I see a situation whereby the wicks at the top of the candle is like this, I don't like seeing that. I don't like seeing that. I don't like it. All right, so anyways, after seeing the alignment, going back to the explanation here, remember guys, the first thing I did, step 1, mark my monthly equilibrium line. Step 2, switch to the H3 time frame to see the alignment, isn't it? Hello guys, isn't it?
Yes, sir.
So alignment is telling us that monthly equilibrium line is far above, and then current market price is far below. Then the next thing, after we can determine the alignment by this. Then switch to the D1 time frame. On the D1 time frame, we are looking for a bearish candle because we have a sell alignment. The bearish candle I'm looking at right now is this bearish candle here. Some of you are asking me privately, Mr. Ibrahim, what if we have a bullish candlestick here and then a bearish candlestick here? You can see this is a bullish candlestick here on the current market price. What if we have a bullish candlestick here like this? What if we have a bullish candlestick here like this? And then we have a bearish candlestick here like this. And then we have a bearish candlestick here like this. And then we have a bullish candlestick like this. And current market price is on this bullish candlestick. Current market price is on this bullish candle. Then which candlestick are we going to be looking at? And this candle here, the candlestick here, this bullish candlestick is the candle on Friday. The candle on Friday. This bearish candle is the candle on Thursday. This other bullish candlestick here is the candle on what? Wednesday, isn't it? Wednesday. This bearish candle, this long bearish candlestick is the candlestick on which day, guys? Which day?
Tuesday.
Tuesday. So which candlestick am I going to be trading right now? After seeing a sell alignment, am I going to be going for this bearish candle?
Tuesday candle.
That's not the right answer. Mr. Akintayo, what is the right answer?
Tuesday candle.
Why should I be going for Tuesday candle? Why?
Well, first of all, I can't trade on the bullish candle because it's a bearish, because the
alignment. Correct.
Yes, and then secondly, the Thursday candle is disqualified because of the imbalance.
The bullish candlestick has disqualified it. Number one. Number two, the candlestick is not even looking like a rectangle. Number two, that's yes. What is the next one?
And then the Wednesday candle also is bullish, so it's disqualified also. So the only one that qualifies is Tuesday, and because it has it looks rectangular, and then it has a lot of imbalance.
Emmanuel, what is the right answer?
Tuesday candle, sir.
So you understand what we are doing, right? You understand?
Yes, sir.
Mr. Ganiu, is that the right answer?
Yes, sir. Yes, sir.
Okay.
Tuesday.
Acosta, is that the right answer? Acosta? Hello, Acosta.
Yes, sir.
All right, all right. Madam K, is that the right answer?
Tuesday is the right answer, sir.
Madam Ozioma, what is the answer?
Yeah, Tuesday candle is the answer because that's the only healthy candle that is
Correct.
bearish.
Correct,
Yeah.
guys. So after seeing the healthy candle we are looking for, what is the next thing to do? The next thing to do is to highlight the supply of that candle using what? Using this tool here. Can you see this tool here? Hello.
Yes.
So that is
Yes.
that is what we
Yes, sir.
use to highlight it. Our proximal line, distal line. Bring out that proximal line, distal line, highlight it on the area. And whenever you are highlighting it on the area, let me use another example. This is a bearish candle now. On this bearish candle, this is the supply of the candle. From here to here, anywhere around here is the supply of this candle. Isn't it, guys?
Yes.
Yes, sir.
Now, whenever you want to highlight your proximal line on the candle and distal line on the candle, don't do it like this. Don't do it like this. It is wrong to do it like this. Okay? It is very wrong. The three dots, make sure that the three dots is on the wicks. Can you see? Make sure the three dots is on the wicks. Because if the three dots is not on the wicks, whenever you switch lower, if you do it like this, whenever you switch lower, the formation is going to go to the other candle. Do you understand? It's going to go to the other candle.
Yes, sir.
And you won't see the correct formation. But if you put the three dots on this one single bearish candle, okay, let me now switch lower now on this single bearish candle now. Let's see the formation on that candle, okay? Let's see. You should be able to see that there is going to be a formation on that candle. Can you see, guys? Can you see? Can you see the formation? Okay, let me mark it wrongly now. Let me now mark it wrong in a wrong way. Let me mark it in the wrong way. Let me mark it and do it like this. You can see the way I do it, right? Now let me now switch lower. Let's see where that is going to be. It is not sitting properly. You understand? Sometimes you might see it, you might even see it like this. You might even see it like this. And if you are seeing it like this, you might be confusing yourself that, is it this formation we are looking for, or is it this formation we are looking at? Then you won't be able to know the right formation. But if you mark it properly, you should be able to know the formation we are looking for and so on. All right, so that is it on this one. Let's move on. Moving on, this is the next thing to do after determining the good candle is to highlight the supply of the candle. Remember, I said if you are not seeing, because not everyone has a very good eyes. If you are not seeing properly, because me too, I'm using glasses. Okay, I'm using glasses, recommended glass. So if you are not seeing properly, you can zoom out. You can zoom out. You understand? You can zoom out the candle. Don't stress the veins in your eyes. Zoom out the candle. When you zoom it out, then highlight what you want to highlight. And then you can zoom back in. You can zoom back in. Okay. So you can see now I've highlighted the supply of the candle. The next thing I need to do after highlighting the supply of the candle is to switch to a lower time frame. Okay. You can see, guys, when I switch to a lower time frame, immediately I switch to a lower time frame, you can see the formation, isn't it, guys? Mr. Ganiu, right?
Yes.
Hello, Mr. Ganiu.
Yeah, I can hear you, sir.
Emmanuel, are you there? Can you see that? Can you see?
Yes, sir, I can see it, sir.
Let me mark it wrongly and see where this is going to be. Let me just mark it wrong a little bit wrongly. Let me see where it is going to be. So if you mark it wrongly, it is not going to be sitting properly. So just mark it properly. The three dots should be on the supply of the candle, like that. All right, when I switch lower now, some of you are asking me which one is a lower time frame. You can decide to switch lower starting from D1, and you can decide to go down like that. Any time frame is just go down. You understand? Just choose one time frame and go down from that time frame. You understand?
Mm.
Or is it
Yes.
a crime? Is it a crime for you
Yes,
to start on H8 and then start moving your way down? Even on H8, you can see the formation here, right? But just that we need basing candlestick. So after seeing the formation on H8, you can start switching lower, 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 till you see the basing candlestick you are looking for. And you can see this is the basing candlestick, right? This is the basing candle. So anyways, most of the time I usually use H3, then from H3 I switch lower, 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 lower. So whenever you are switching lower, if there's something you are not seeing on H3, for example, if I'm not seeing the basing candlestick, you can see right now on the H6 time frame, we don't have basing candlestick here, right?
Yeah.
I believe you guys know what basing candlestick is. Basing candlestick, go back and watch the video. Basing candlestick are small candlesticks, isn't it, guys?
Yes, sir.
Whereby if we draw a square around a box around it, it is going to fit inside the box and so on. Now, what is the meaning of basing candlestick in the first place? Basing candlestick is order matching process. It is where buyers and sellers are being matched together in a transaction before market price finally move down or move up. Now, this is the zone. So if I'm not seeing the basing candlestick, I already know where the zone is right now, isn't it? My analysis is
Yes.
done. My analysis is done already. What I'm trying to do right now, I'm not trying to look for the zone anymore. I'm not looking for the zone because I see where the zone is. What I'm trying to do next is to be able to mark out the zone properly. You understand? To be able to mark out, I'm trying to determine where to mark out my proximal line, distal line in a more proper way. Do you understand? That is the next thing to do after you switch to a lower time frame. So from H6, I need to go to the H4 time frame. From H4 to H3. Now on H3, I'm satisfied with this basing candlestick I'm seeing. You can see I'm already seeing the basing candle on H3 already, isn't it, guys?
Yes.
So what I have to
Yeah.
do on H3 is to mark out my distal line. We all know in a sell trade, distal line is at the highest point of the base. The highest point. Some of you are asking me, are we adding the wicks to it? Yes, always put the wicks. Always add the wicks. The wicks is part of the formation. But whenever you are marking proximal line, you won't be marking your proximal line on the wicks. You have to mark your proximal line on the body of a bullish candle. Just go back and watch the video on how to mark proximal line and so on. So this is the zone like this here. Isn't it, guys?
Yes, sir.
So you see,
Yes.
that is the zone. Now, after marking the zone, just highlight it like that, and then highlight it with your yellow box. Whenever you are highlighting it with your yellow box, remember not to highlight it like this. Just do it like this. So that is the zone now. You understand? That is the supply. So this supply zone I mark now, we are expecting market price to come back next week, trigger the zone, and then do what? And then come down. Do you understand?
Yes, sir.
Yes, sir.
And then this zone, I'm going to check on the D1 time frame. Is this zone closer to a demand or a supply? What is the right answer, guys?
Supply zone, supply
We
zone.
are looking for opposing zone. After marking your zone, after marking your proximal line, distal line on the zone, and after seeing that the zone is giving us 1:3, remember before we take any trade, that trade must be giving us 1:3 in price. That is, when price was leaving the zone, how much time did price spend on this zone? Market price spent little time on the zone, and the market price dropped down. When market price was dropping down, how did price leave the level? Market price leave the level. Is it in a weak way or is it in a strong way coming down? The answer is it is in a strong way coming down. Then if it is in a strong way, how far did price go before price come back into the zone? before price returned back into your zone, how far did price went? Price went far, all the way far to up to 1:3, isn't it?
Yeah.
Yes.
That's what we are looking for. If it is not up to 1:3, don't take it. For example, now, let's say market price is somewhere here. Let's say this is what we have. And then market price is trying to come back to the zone like this. Are you going to be taking this type of situation? It is not up to 1:3 when price leave the zone, right? You won't, don't take it, okay? Don't take it. It has to be 1:3, okay? So that is it. Then the next thing you need to do after determining the risk and so on and so forth, the last thing you need to check is your zone sitting on a higher time frame demand, because I'm trying to sell here. But if I'm trying to sell here, I need to check on a higher time frame. Is my zone sitting on a higher time frame demand level? That is my zone sitting on a higher time frame structure by structure? You know, this is what structure is. Look at structure, guys. Again, look at structure. Market has been giving us this structure before, right? Look at, right? Can you see the structure? Structure, 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 structure. So we are expecting something like this and like this, isn't it, guys? On
Yes.
this area, because I can see that market price is in a supply. My zone is on the supply of that area. Do you understand? My zone is on the supply side of that area. So I'm good to go. I'm good to go. I'm good. I'm good. All right. So that is it, guys, on this trade. Okay. Any question on this? Any question? Any question? Any question before we move on? 3 minutes left for this Zoom to end. Any question? All right, no question. Then let's move on. Also, whenever I want to take a screenshot on my chart, I don't like taking screenshots if I see that, for example, now, the idea of taking by before and after screenshots is, if you want to take a screenshot and you take a screenshot of on this H1 time frame right now on this chart, if market price is trying to come back to the area, you might not see this formation anymore. Market price is going to, the formation might be on the far area here. You understand? So if you want to take a screenshot of the before, and if the after happens, for you to be able to see the whole picture at once, the before and after picture in the same situation, then you can mark it out on a higher time frame. Take the screenshot on a higher time frame like this. Because if market is moving, this zone is no longer going to be stagnant in this area. It is also going to be moving like this. Look at it. Look at this, guys. The zone is going to be moving like this. Isn't it?
Yeah.
It is going to be moving gradually. So if you happen to mark it on a smaller time frame, when the after happens, you might not be able to see the after properly and so on. So I like marking out depending on the situation. Sometimes I mark it on a lower time. If I mark it now, do you think if market happens to do something like this before coming back to my zone, you can see I won't be able to see the after on one picture. You understand? I won't be able to, because it is not going to contain the whole picture. So that's why just take a screenshot on a higher time frame that you feel that if markets come back to the area, it is you should be able to see the whole picture on the after also. All right. So let's analyze Euro USD. Euro USD. On Euro USD, I'm going to be doing it very fast. Euro USD, this is our monthly equilibrium line. The same situation. This is our weekly. Market price is far above. The next thing, daily. The next thing is to check daily, zoom it out. The candle on the daily is here. Switch back to a lower time frame. Determine the formation on a lower time frame. I see that that's the formation. Mark it out. Market is going to come back there. Right? That is the, and but you need to check the last thing is the zone on the demand.